How much has the government stimulus propped up Australians?
Yes, well, good morning, and thank you for having me. Look, it definitely has propped people up. There's definitely some fears there of some companies that are just going to run dormant once JobKeeper sort of ends. But we're actually seeing a significant increase in family household savings because they're not out and about doing as much, but they're still getting an income stream. So it's quite interesting.
What about the recent announcement, or yesterday, from the Treasurer getting into place, or, the first talk, they're going to get a bit of opposition on this subject, but to just loosen the bank's shoulders a bit, because they have been particularly difficult when it comes to lending. A lot of people who are watching this television program this morning no doubt have been going for loans and being knocked back, or going for extensions on loans and going through all this paperwork to try and get what they want.
Yeah, it's definitely been a case of lender beware since the laws were changed in 2009. Obviously, the Treasurer saying yesterday he wants to take it back more to a situation of borrower beware. But we all love bank bashing. It's become a bit of a national sport in Australia, but it's got to be a two-way street. We as a consumer have to take some responsibility that we can afford the loan. But likewise, in the last sort of 2 years or so, and especially right now, if you can even obtain a loan approval, it's almost like you've got a golden bar. It is very, very difficult for families to obtain credit right now.
What's your view on this subject?
Look, my view lies somewhere in the middle. I think that there definitely has to be a lot more responsibility on the lender's perspective, but we also have to take some accountability as a consumer that, we're capable of spending what we're borrowing, and that we're being realistic. We need to budget for things. We need to put our pennies away, and we need to be structured. This I see, I want, I get, I afterpay, or put on some sort of interest-free finance situation we have that's growing in society is quite concerning to me.
Many of people of my generation, when we first bought units or properties, interest rates were 18, 19%. Money is cheap at the moment, 2.29 some interest rates are. There's talk of 77% chance of another rate drop. So the bottom line is, should people speculate to accumulate? A lot of people are frightened of debt.
Yeah, definitely, and it's an interesting phrase, speculate to accumulate. But if anybody's considering entering the property market, they need to have a long-term view. I guess at the moment it's a bit of a and B testing. Do your numbers. At the moment, money is so cheap, and it's highly likely to stay cheap for a considerable amount of time. So I would encourage people to look, if they're renting and they're first home buyers and aspirational, look at the rent you're paying versus the loan you would be paying. But they need to factor in that nasty little thing called interest.
Yes, exactly. But people should do their due diligence, shouldn't they? From your perspective, you're the expert, not me. But at least do it and see where you can go, because a lot of people probably haven't scratched that itch and just stayed where they are, because a lot of people could probably get out of that renting cycle and buy if they just looked at it.
Well, we've got the other stimulation as well with the $25,000 home builder boost. So the government's really throwing money at it left, right and centre. I think we're probably around 3 times the economic stimulus we were in the GFC to date. So I think they really need to do the numbers. Like you say, do the due diligence. Is it right for you? Does it suit your circumstances? But hold a long-term view. And don't be looking at a 30-year loan term. You want to be able to pay that loan off in 10 to 15 years. You don't want to be in that minimum repayment cycle over a 30-year term, because it's really going to be the equivalent of renting if you're paying minimum repayments.
That's good advice. And look, there was all the talk that properties may drop by 10, 30%. It hasn't seemed to work that way. The property market, particularly in the big cities, holding strong.
Well, not only that, even internationally, the UK's had the largest property growth since Brexit, and the US is having a run as well, interestingly enough. So, we heard drops of up to 50% a couple of years ago in the media, yet Sydney, I think, alone, when they were picking on a 50% predicted drop, grew 10 to 15% in most areas. So it seems to be holding strong. People are rethinking their life now. They've had a lot more time at home, a lot of family time. A lot of people may not be returning to the office, so they're looking for properties where they can have home office space and good technology and privacy. So it's interesting. The market seems to be quite buoyant at the moment.
Finally, Graeme, are you and your team at Infinity seeing Australians more conscious of their finances and more across it now they've had more time to probably sit at a desk and go through a few things?
Yeah, we've had almost a 300% increase in inquiries since COVID started, and it's mostly around the financial literacy space. What we're seeing in the industry is that people don't want to be sold a loan or a product or service. They're really looking to educate themselves now while they're stuck at home, and they really want to understand how they can borrow, why they should borrow, and how to structure it. And that's been really, really, I guess, positive.
And from a government point of view, money needs to be spent for the economy to go, and that's exactly why Josh Frydenberg is doing what he's doing.
Absolutely, absolutely. We need to get the economy going again ASAP.
Thanks for joining us this morning. Enjoy the rest of your weekend.
Likewise, pleasure. Thank you.